last time you gambled?
Never.
Ever.
I never ever gambled.
What's wrong with you? You don't like being rich? You gotta just gamble and gamble until you win, man. It's gonna happen one day.
80% of retail investors lose money investing, and when you play roulette, you actually have 48% chance to win. This brings me to a conclusion. Can gambling be actually more profitable than investing? Well, if we consider fun as a profit, then definitely yes. But seriously, it all depends on how you approach this question. First of all, why are the odds of profiting so low in both? It turns out that for both gambling and investing, the main beneficiary are brokers and the casino. These institutions are doing the same thing, and that is putting a small fee on every of your transactions. This small fee that most people miss is actually game-changing if you want to achieve profit in the long term. Let's take a look at roulette, for example. The odds to win are 48.65%.
Please give me 2.
So if you simply average it down, you will always be loser, but in the short term it gives you this juicy 48%. The stock market, on the other hand, is just built different. Not so much if you ask me, but still a little bit different. All because they still charge you fees and element of randomness is still involved. But there's one more component to this, and that is skill. And you might think, oh cool, I have the influence so it's better, but turns out not really in most cases. That's the reason why 80% of retail investors lose money. This means only 20% profit, and it's way less than the chances to win in roulette. You see, the market is really hard to outperform because you play against other people. And when you play against other players, you may actually get outplayed. It's essentially a competitive game where money flows from people who lose to those who win, and the brokers get their small fee no matter what. Win in this case means predicting future more accurately than others do, and your profit is just a spread between your opinion and investors' consensus. And if you enter the market for first time and don't have any knowledge, you will likely be among the people who got outplayed. It all means that if you want to earn money fast and you don't have any plan or knowledge, you actually have better odds in the casino because solid 48% is way more than 20%. And there are some strategies that actually could help you earn money gambling. But first, let's talk about time frames and how gambling and investing differs. First scenario, you actually want to do a quick flip and one-time transaction that will make you double the money. You go play roulette and it's straight up. You instantly know if you won or not. You get the money or you lose it, hopefully not your rent money. So if you want to do the same thing in the stock market without knowledge, it gets really complicated. You have to send your money to the broker, pick a stock, buy it or sell it, and what? You have to wait, and it's a huge disadvantage of the stock market. There is something called cost of lost opportunity. And what it means is that your money is essentially locked in place and you cannot make another use of them. Can't spend it on Lambo, Thailand holidays with the boys,
I'm Lady Boy.
or to invest in other opportunities that arise. You just have to wait till the money is gone or double. And even the most volatile stocks do not move so fast, so you better be patient. You can actually mitigate loss of time by using leverage or buying options. But it would be way faster and more fun to put everything on red and grab your solid 48% to win in casino. But what are your chances of winning such a gamble trade in the stock market? There is no specific number for that because it's way too hard to measure. But if you would ask me, I would say way less than 48%. This is all caused by the competitive nature of the market. There is also a big chance that your trade decisions are based on your emotions or information from your friend that tells you that something will grow because it did in the past. This is just how beginners lose. Most of them just join in the peak of the cycle when everybody talks about stocks and all the gains have already happened. It's really tempting to call it a joining fee. And yes, I have paid it too, like 10 years ago, but still, I did. But what about long-term gambling and investing? Well, this time is different, because the luck aspect is mitigated by number of attempts and duration of trades. This just means that if we talk about gambling, you are straight up losing your money. Your 48% odds to win are lower than 50%, so if we average it down, you are on the decline. In the stock market, you have a bigger chances to win this time. Inflation works in your favor, you have picked some good and bad investments, bought in different time frames, so it's all averaged down, and there we go. Your chances of first gains just rose. You also lost your joy, but I guess it's also priced in. Anyways, your chances are still pretty low, but if you will learn, it will rise. So let's jump back to gambling. What if I told you that there is some strategy that never lose, and it's called Martingale system? How does it work? That's pretty simple. Double your bet after every lose. Goal? Recover all losses with one win and then some. Example: bet $5 and lose. Bet $10, lose. Bet $20, lose. Bet $40, win. Total profit $5. The problem is that it would work 100% of the time if you could play an infinite number of times. Sadly, table limits exist, and you can also run out of the money before you win. It's actually pretty easy since rates rise exponentially. If you start with a $10 bet and hit lose strike of 10, you have to place next bet of $10,240, and after 20 loses, almost $10.5 million. There are more strategies like the Paroli system, which is basically a reverse Martingale system, Fibonacci system, or James Bond strategy. Despite it all seem cool at the first glance, it's not working in the long run. Odds lower than 50% always mean losing money long term no matter what strategy you use. And odds are always lower than 50% when house is involved. But what if we play poker or bet on sports? That's actually a whole different story, because good poker players can consistently outplay others. Huge amount of randomness is still involved. Despite it, some people still manage to shift the odds enough to profit long term. But how do they do it? Shortly speaking, they control the risk to reward ratio, and they do it, for example, by using probabilities and expected value. And it simply means that they calculate whether a call is profitable based on the ratio of the pot size to the bet size. They predict potential future winnings if they hit a strong hand or play in a way to force opponents to fold superior hands. They also read opponent's behavior to punish his mistakes by detecting inconsistencies in their behavioral patterns. Also, professionals don't play specific hands. They think in ranges and narrow down what their opponent might hold to calculate possible outcomes. There's way more to that, but let's jump a little bit forward and pretend that you can do all these things. Everything that I mentioned, and also the things that I don't even know about. Anyways, you managed to shift the winning odds in your favor, and now it's 52%. Not much, but if you average it down, you will be consistently profitable poker player. There are still some problems that you may encounter, and they are caused by your humanity. Simply saying, you can't perform perfect all the time, so you have to be careful about your psyche and if you are rested or not. So that's all, right? Not really, because we still have one thing to talk about, and that is sports betting. If you are trying to get profitable betting on sports, I have a good and bad news for you. Good because it's actually possible, and bad because it's really hard. Again, you have to collect as much information as you can about teams, players, their current state and behaviors. Win strikes or lose strikes that can affect their psyche and make them better or worse playing. There are three big problems with betting on sports, and the first one is limited input. By input, I mean all the information that are available for you. Everything that happens behind the scenes is invisible, not even talking about players' health metrics, motivations and mindsets.
Are you the best footballer in the world right now?
In my mind, I'm always the best.
The second problem is bookmaker that just shift your odds to negative by charging fees just like broker or casino. And the last issue is evaluating the information that you already have. It's crucial because you have to be more right with your evaluation than most people plus fee. So to profit with sport betting, you have to do a thing that's called value betting. It's nothing more than a cool term for betting with your brain, not emotions. For example, bookmaker odds for team A equals 3-0, which implies 33% to win. But you disagree and it's 50% to win for you. It essentially means this is a value bet, because it's 50-50 but reward is 3.0, not 2.0. So the reward is bigger than the risk you take on. If you find a lot of inconsistency like that, you should earn money long term from sports betting. It's possible because a lot of people bet for the team that they like and bookmakers' bets are priced based on it. The bigger the inconsistency in pricing, the better risk to reward ratio of a bet. And that's essentially what stock market is also about, because people buy stocks based on their expectations. Market value of a stock is essentially an average down opinion of every investor that is involved, so if you can evaluate information better than an average participant, you can actually earn money. It's hard because the stock market is essentially a playground for the most intelligent people on the planet. But more on that in upcoming videos. Togi, if you want to learn stocks and become even richer, DM me. Thank you for watching. By the way, if you want to win $1,000, you can try to guess Tesla's stock price at market opening day, July 1st. Best guess will get the money. To take part, comment something about this video and then stock price just like this. Details in description.